Hey guys, welcome back. In today's video, we are talking about the big bet on AMC, over leverage failing, the big squeeze, and many more in this video. First, we're taking a look at this. You can see here, Discovery Capital makes big bet on AMC. Now, recently with their filing, we see that they own nearly 7% of AMC's outstanding stock. And this is what we've seen, making it Discovery's largest US listed long equity position. Now, we've already been seeing how institutions have been accumulating shares of AMC. This is something we've talked about how they've been doing in silent because they don't want people to obviously catch on what's actually happening with AMC. You can see with this particular filing, and you have to realize is that with this particular trade and with the thesis behind the investors of Discovery is that they think that there's a special time every 5 or 10 years where there's a really spectacular trade in investment that we will then concentrate in a meaningful way. So this isn't what they said about particularly in AMC, is obviously talking about them in general, but the very fact that we are seeing how this is now their largest US listed long equity position, it could really only lead us to believe that they understand what is happening. Now, we've already been seeing institutions accumulating, but this is just really showing how much institutions believe the potential there is for AMC. And so all these times when you're seeing these articles telling you to sell your AMC shares, telling you should stay away from AMC shares, you got to be looking at what the actual big capital are actually doing. And in fact, they are all buying AMC, and they believe that AMC is the big trade for potentially this decade. And so this is what they're obviously looking out for. And then you're looking on the other hand with what the shorts are obviously trying to do. So we talked about how it's going to become a fact of institutions are going to try and buy as many shares as possible, but that will only be the case if retail were to sell their shares. And so in this case, as we're seeing institutions trying to accumulate, we're also seeing how shorts trying to force retail from selling their shares. You can see the Nvidia leverage pump is already in action, while other over leveraged short positions like AMC and GME, for example, continue to fall, but it won't be long now. So today, when you take a look at AMC, what we saw was that AMC is down 5.17%. Now, however, if you take a look at some of the other stocks, such as stocks in the Mag 7, like Nvidia, for example, you see that they actually went up today. Now, this has always been said in our videos. We talked about how these institutions, how these short sellers have used these over leveraged assets as collaterals. We talked about Nvidia, we talked about all of these other stocks as well. And so you can see the correlation of Nvidia going up and then AMC going down. That's because they're using Nvidia as collateral to then suppress and manipulate AMC, and that's what they are doing. But just like we've said with everything, with the current market, with how everything's going right now, you can only see it go up so much. And when you put yourself in that position where you've exposed to too much risk and the stock starts dropping, whether it's because of a pullback, the market crash, or that the value is no longer there, that's going to create big problems. And when that time comes, you obviously understand why AMC will then be the best stock to hold and why it will go up despite the whole market obviously crashing. But another thing to also understand is how the very fact that they are shorting right now is only going to speed and accelerate the squeeze. The reason for this, you can see, as you maybe add lower price at AMC short selling, the better for MOAS. That is not necessarily short sellers pushing down the price. I suspect the intermediate 333 was there to ingest confidence and secure that retail keep holding during the drop. But I wanted to talk about why the fact that if they continuously shorting at AMC at this level, why is a problem for them? The reason for this is just like we've said. The reason why we said AMC can break out after $6 is because we knew that there are a big chunk of short orders above that $6 area, ranging from $6 all the way to $9 area. It isn't to say that there's only short positions there, it's obviously spread everywhere else, but there's a large concentrated short trades at around the $6 to $9 area. Now, if they do the same thing over here, if If they also continuously short at this current level at where we are right now, and evidence and data has shown us that AMC should be above this level, then it would just mean that every time AMC goes to $3.50, goes to $4, it will also put a lot of short sellers in the red as well. And like we've always understood, the only way for them to bring the price of AMC down is to create synthetics. So not only do they create more synthetics, which raises the floor price of AMC, but by holding a lot of short positions at this current price area, the moment we flip that, the moment we go over that, it's going to put a lot of short sellers in the red as well, and obviously forcing them to close. And so that's why we understand that the more they short right now, the bigger the hole they've dug for themselves and the more risk they expose themselves to. You can also see from this particular thing, oh yeah, I remember these crystal clear, the TRS receipts from DCCC that blew the lid off the synthetic game. We're taking a look at 843 million AMC and 43 million GME, over $12 billion notional, all wrapped up in total return swaps. Now, bear in mind is that these are only the ones that we can see. There's obviously still a lot hidden, but the very ones that are shown to us is obviously these that we are looking at. And you have to understand is that this is obviously a ticking time bomb. And when it runs out, when they can no longer hide it, when it all comes to the end, they obviously have to buy it back, and you understand the position they've put themselves into. And we can see from this particular picture, like we've shown in the past, you can see from AMC 843 and then from GME. Now, one thing to obviously note here is that the total return swaps for AMC is way bigger than it is for GME. I've always said it isn't a competition. When AMC squeezes, GME will squeeze along with it. If GME were to squeeze first, then AMC will squeeze along with it. It isn't a competition, but we've always talked about in terms of this allows us to understand where the floor price is. Because of the fact that AMC on the market is cheaper than GME, it's obviously cheaper for them to create synthetics as well. And it's why we always look and see that sometimes when GME runs, AMC doesn't run with it, or at least not to that percentage. And that's because they are able to create more synthetics. But it's the very fact they are able to do this. We know that the floor price for AMC is already in the tens of thousands, potentially even hundreds of thousands. And so that's why they always are doubling down on AMC. And you can see from this big stink bids on AMC and HYMC, where we take a look at this. Now, the thing that's very interesting about this is, like we've said, the reason why we don't see real price discovery for AMC is because they're constantly finding ways to obviously suppress the price, whether that's with spoofing, dark pool, like we've shown yesterday, the total return swaps that we've just shown, the tokenizations. There have been plenty of ways they've used to suppress AMC. And that's what we're looking at, and it's why we understand we're never seeing real price discovery. But now, another way they're trying to hinder AMC is by these spoof orders on HYMC. For those of you who know, obviously AMC has investments in HYMC. And so when HYMC does very well, so will AMC. And they understand this as well right now. And it's why they're trying to suppress HYMC as well, because they're trying to do anything they can to prevent AMC from going up. And for those of you who said there are no more short sellers in AMC, the very fact we've just shown you this, wherever it is in today's videos or yesterday's video or any video in general, it's all showing how they've been desperately trying to manipulate AMC. And the question we can then ask is, if they're not trapped in AMC, why are they going through the lengths of doing this when they can put in their capital in somewhere else, whether it's better investments or better returns? Why are they still doing this in AMC? And that's because they understand if they let AMC run, they will lose out on hundreds of billions of dollars. Another way, and we just talked about how, the ways they use to manipulate, you can see this as well. So Superman leaps to 122 million to lead weekend box office haul. Now, the interesting part about this is the stocks that are mentioned. You can see Warner Bros, Disney, IMAX, AMC. However, another stock that creeps in is AMC X. Now, the reason why I mentioned this is because of the fact that we have seen in the past how news with AMC X was then used by the AMC ticker symbol. And when it was negative news about AMC X, the symbol that was mentioned was AMC. and we talked about how they potentially use algorithms to then obviously do that and suppress AMC. And so in this case, whilst AMC exit is obviously relevant in this article, the fact that it's above AMC, the fact that it's in front of AMC, and that it's a good particular article, seems like to me that potentially are they trying to do something again, where they're trying to take away the volume that is there for AMC. We've already seen how AMC suffers from spoofing and how it suffers mostly from dark pool orders where the buy orders gets hidden away. And so in this case, it only makes me wonder, are they trying to take more buy volume away from AMC? But yeah, guys, that's it for this video. As always, none of this is ever financial advice, so do take what I say with a grain of salt. Make sure to do your own due diligence and research, and I'll catch you guys next time.